Hi everyone, I'm David.
And I'm Adam.
And we are the Real Estate Dads. And we are making this video because of the recent tax code reform. We've had a lot of questions from past clients about how this was going to affect them.
Yeah, regardless if you're a buyer, seller, every client has asked us, how is this going to affect them?
Right.
How is this going to affect their bottom line?
Yep. And the tax code is extremely complicated, and we're not going to discuss the whole thing by any means. We're just going to hit on 3 areas that we feel affect the real estate market or real estate in general and homeowners.
Right, right. It's basically the top 3 points that our clients are asking us about.
Right, exactly. And again, we're not tax professionals, we're not CPAs, so please do not take this as advice. Always consult your tax professional for any type of advice.
Correct, and we will repeat that at the end. So.
Of course, absolutely. 3 areas that we're going to touch on are the exclusion of capital gains from the sale of principal residence.
Correct.
And the mortgage interest deduction, as well as the state and local tax deductions that include property taxes.
Right.
So the first one, with the exclusion of capital gains on your principal residence, before the reform, basically if you're a single person and you lived in your home 2 out of 5 consecutive years, you were able to net up to $250,000 capital gains free.
Right, and if you're married, you could net 500.
Right.
Yeah.
And so when they were talking about changing this, they were thinking about making it a requirement where you live in your principal residence 5 out of 8 years.
Wow.
Which is a big difference.
That's a huge difference.
Right.
From 2 out of 5 to 5 out of 8.
Yeah. So as you can imagine, there's a lot of concern about current homeowners or even people looking to buy and how long they have to stay in their home before they sell it and get that benefit. So the good news is they ended up in the final code that they reformed, they did not change it at all.
They left it as is.
Left it as is, so
fantastic.
Nothing's changed.
Good.
That's good. The second area that
mortgage interest deduction.
Right.
What it was before was that you can deduct your mortgage interest of up to $1 million.
Right.
Okay. What they wanted to do was drop it to 500.
Yep. Cut it in half.
Cut it in half. And you know, in Los Angeles, prices are typically well above that.
Right.
So for them to cut it in half was going to be would have a huge effect on your taxes.
Yeah, yeah, definitely. And thankfully, they compromised and they met in the middle. So they've now made it $750,000.
Mm-hmm.
So and that's if you had purchased your home after December 14th, 2017.
Correct.
So the good news is for homeowners prior to that date,
you're grandfathered
in. So nothing changes for you in this particular area. However, if you bought after that date, then the most you can deduct on your $750,000. So what this means in terms of price point and where this may affect certain homeowners is people looking, if you're putting a 20% down payment, basically people who are looking to purchase a home between the $938,000 range to $1,250,000.
Okay.
If you are below that, you don't have to worry about the deduction. You fall under the minimum requirement.
Right.
If you purchase a home with 20% down above $1.25 million, nothing's changed for you either because the previous code only allowed you up to $1 million anyway.
Correct.
So it's really kind of that sweet spot.
Right.
That price point.
Right. Okay.
Let's see.
The third point.
Third point is the state and local taxes, which includes property taxes when you're deducting.
Mm-hmm.
Now this really is probably going to affect, it's going to affect people that itemize. So if you don't itemize, this shouldn't affect you.
It shouldn't, but definitely consult your CPA about that.
Yes. But if you itemize, essentially you're going to be only allowed to deduct a total of $10,000 from your taxes for state, local, and property taxes. Now, being in Los Angeles at the price points we are in, property taxes, basically this will probably carry you over that $10,000 threshold.
Yeah, easily.
So this could affect you as a homeowner going forward. So this is where the question becomes, well, how does this affect the real estate market?
Okay.
And we've talked a little bit about this, but
Yeah.
we both feel like it probably is not going to affect the Los Angeles real estate market all that much.
Yeah, I mean, most of my buyers, and I know most of your buyers, they are buying for a specific reason. It's to provide for their family. You
Right.
know, buying for the sake of saving on taxes is not a major reason to buy.
And specifically for your primary
Sure.
residence,
Right.
right? I mean, that's in our experience. You know, when we ask people their reasons for wanting to buy,
Right.
nowhere in their top 10 reasons
Right.
do they mention, well, we want to save on taxes.
Right.
It just doesn't come up.
Right.
It's a benefit. It's an added benefit, and definitely grateful for that.
Sure.
But their main reasons are just pride of home ownership, really.
Okay.
And the financial benefit is not paying somebody else's mortgage,
Right.
right? I mean, you're
Right.
paying rent. Rent has gone up.
Rent's gone up exponentially.
Yeah, I mean, it's amazing how fast it's gone up. And
Right.
at some point, you realize, well, you know, with a certain down payment, your mortgage could be equal to or less than your
Right.
rent.
Right.
So it just makes sense to buy.
And also, I mean, buying a property is a long-term investment, and everyone knows that over time,
Yep.
real estate appreciates. So, regardless of the year-to-year implications of the taxes,
Right.
when you go to sell that property in, say, 10
years.
10 years, 15 years,
Yeah.
you know, you've appreciated so much that you're ahead. You're ahead of the game.
Right, exactly. And
So,
I think that's when people think about the financial benefit.
sure.
Long term
Sure.
is always a good play.
Right.
And also the sense of community,
Mhm.
schools. You know, usually when you're buying a home, there's that pride. People fix up properties. The
Right.
neighborhood's nice, and you really build that togetherness.
Right. I mean, it really is that. It's the pride of ownership. It's calling it your property, your
Right.
home. It's your ability to do whatever you want to it.
Right.
You know, expand it, paint it a different color.
Yep.
You know, it's yours. And then also the sense of belonging to your neighbors.
Yeah.
In the community.
Yeah. So really, those are the reasons why people
Right.
buy, not so much the tax
tax.
benefit. So we just wanted to make this quick video,
Yeah.
short and sweet, hopefully for you, just to go over some major points. But again, everyone files differently. Please consult your CPA.
Please consult your CPA.
Yep.
All right. We'll see you soon.
All right.
2, 3.
Good morning, everyone. Nope, it's not morning.
It is still morning.
Yeah, well, but when they see it, it may not be. We'll do it again.
You want a chocolate?
Kind of do.
Get a chocolate, dude. You walked extra today. And that's on video. He walked extra.